These techniques will work. And this is something that Mark pointed out a long time. He said, why aren't we trading, crypto and all these cryptos? They're like responding perfectly to your tactics. And then, of course, recently we were trading IBIT, which is Bitcoin, of course. But there's lots of cryptos. But this chart shows a couple things on how we trade and also how we handle the risk side and getting stopped out. But one point to make is opportunity cost. So yes, you could own a Amazon and hold it for I have a friend that's held Amazon for like 15 years. He's made a fortune in it from a very small investment. But how many people are fortunate enough to do that? And how many people would hold through a 50% drawdown or 90% pullback to get to that, right? So I always say somebody wins lotto every week, but every week the name's different, right? So I started trading because I wanted to get rich and I wanted to have the freedom of having a job that I had the freedom and I didn't go work for somebody. And I needed consistency. I needed to make money consistently for two reasons. One, because I needed to make money, and two, to grow your wealth, you need to compound. So I realized that, you know what, stocks go up 10, 15, 20%. Every stock goes up 10, 15, 20%, but only a handful go up 80,000%. And it takes a long time. So I did the math. I realized, and we have something, the Master Trader Program, it's relatively new. I've been only talking about in the last few years. It's called mind-blowing math. And once you see that, it changes everything. Your entire, I've had hundreds and hundreds and hundreds of people send me emails and just go, my God, that is just blew my mind. You said it was mind blowing. It was mind blowing, and it changed my whole perspective. And so here's a perfect example, and this is off of the what we would call the cheat, the low cheat right here. It's a perfect example, and this was already an existing um, security, obviously, but this is where they put the ETF and it formed what looks like an IPO. But you've got this little low cheat. We bought it right here, right? Took a full size, big position right into strength, reduced it. Um, Bitcoin could be volatile. So I said, you know what? Let's take some off the table here. Now we're free rolling, right? But then it's set up. And like I said, you could sometimes get very often your best buy is at a higher price. So it sets up, it tightens up real nice here and holds its gains, sets up a perfect, if you look at it, it's a perfect cup with handle, right? BCP, what I call it. Boom, comes out here, we're back in. We move right back up and we ratchet up again. And I do the process all over again. I reduce it into the strength and I cover my risk once again. And now I've already backlogged a profit and now I backlogged two profits. So now I'm really free rolling. Moves up a little more, I reduce, and then it had this break. And I felt like, oh shit, I should have sold it into the strength and just closed it. But I got what I call the gift. When you get a big break and you get that dead cat bounce, especially if it comes back 2/3 or so, I usually just get out right then and there. So I punted it on that next day. And then it went up a couple more days, rolled over. Now we tried to get back in it over here as it came off the lows here on a little pullback buy. And we were thinking this will probably not take off right from here. It'll probably come up and tighten up, and then we'll add to it. And it did. And it was looking perfect, but then it turned tail and we put a break-even stop. We got out. Then we kept watching it, watching it. It went through this, it undercut these lows, perfect, tightened up. Now I was like, okay, this is it. This is where it's really going to take off. We got a nice big base now and really getting aggressive on it and started buying it right here again. And then we just put a super tight stop, got out on it right away, got stopped out of it. And I thought I might have blown it because right after that it took off, went up a few days, and Mark, we had a conversation. He's like, "Uh-oh, I think we might have got out too quick here." But since then, it's rolled over, and now we're out of it. But that's the way we're trading around positions. We're adding back, we're reducing, we're using strength to sell into, getting out when the getting's good, and not walking away from a stock. Even there's sometimes where I'm buying the stock on the fifth base. I was buying it on the first base. I sold it. But second base, I bought it 5, 6 times, buying it as it comes out of base after base after base. And then when you string it all together, you got this really nice big return on that stock, but it's from a number of trades.
And jumping with the question, because you mentioned free rolling a trade, and just to clarify for people who may not be familiar with that, when you say reduce and that label when you're selling for that first push up, you're also moving your stop up to break even, and that's what's free rolling the trade. Is that correct? And is there anything you want to add there?
So, all right. So it's a great question. Mark, if you guys have anything to add, I know usually we're talking the same language, but look, there's a few ways that you can free roll. One is you buy the stock, it moves up, and now you move your stop to break even. Obviously, if it goes down, you break even, right? But the problem with that is that now you choke the trade. You cinch up on the trade. You do have a full position. You have your whole position still, right? But now you're not giving it any room. So a compromise is to, if that stock goes up X percentage, and the more it goes up, the less you have to sell to do this. If it goes up an equal amount to your stop, let's say your stop's 8%. If it goes up an equal amount, it goes up 8%. If you sell half, you now can let it go down that 8% and you're still break even. Now, you only have half the trade, but you have two things to your advantage. One, you have unlimited upside on that half position and you have zero downside. All right. So and you've been able to give it more room now. You give it the room. So you've got those two things going for you. Now, you could do the same thing mathematically and say, well, I have 100% upside and no downside, and I have double the position. Right. But now you might be knocked out of it and you have no position. So me, I'd rather have half position and give it more room most of the time, especially if it's the beginning of a bull market, because now if I'm on a monster, even a half position could be huge. Later stage, I'm not even playing that game. I'm just selling right into strength and just getting out when the getting's good. And I'm not thinking hold for a big move when I'm fifth stage base and I've been in a bull market for 3 years. Now I switch over to more to a trader. So again, there's nuances there and there is some art to it, but a lot of it's science too.
And one more question I had about this trade is before your June or late May trade there where you were stopped out, there was kind of a potential low cheat area there in early May where it pushes off the lows. Was that not quite tight enough for you? There was also a gap out of that area. How would you kind of analyze that part of the chart?
So we were looking at it there, and that's exactly right. And I know you have a good eye for this. But you see it gapped, it didn't really tighten up, and then it came out on the gap. And we're not going to chase the gap. So you have the overhead too. You've got
Right.
more overhead. When you're going low cheap, you've got a lot of overhead. So if you're really close to the overhead, now you've got to measure how much overhead to the left and how deep you are. So if let's just say this was a 50% decline. Okay, this overhead is major. I'm not touching that. Let's say this is a 15% decline. Now this is very viable because there's very little overhead. Still, even with that scenario, probably unless things are going great and everything's just ripping, we probably still would take a partial position and then sort of build into it because most likely it's going to run up, it's going to go into this overhead and it's going to pause just like it did. And this is where you can see how it's developing. Is it doing what it should do? This is absolutely perfect. Up to this point, it's perfect. And even this pullback, nothing wrong. Then here, that's abnormal. That's not acting right. And as it comes below here, now it's really not acting right. So now it's got to go through a whole reset. It's just not, and when I say not acting right, meaning that the supply is coming to market. We have not gone through this supply. The supply, and this is a concept that I originally heard O'Neill say. He said you have to find out when supply stops coming to market. And then I termed it, I want to be the last weak holder. We talked about weak holders. I want to be the last weak holder. You heard Mark talk about that earlier. That means that the supply, you're in an uptrend. There's big institutions that are buying this stock. There's a lot of small guys, right, that are trading this, that they're weak holders. They're gonna get knocked out on a little pullback. They got their stop real tight. They're doing all these techniques that we're talking about. Those are weak holders. But the big guys, the guys that are really moving the stock, that can sustainably move the stock, they're forming the cup. They're buying down here. They're supporting the stock. So when finally you weed out all these little guys, well, there's nothing left. There's no supply. And now you have big demand. So if you have big demand and low supply, what happens? Boom, explosion. That's why it's not a coincidence that when you see these charts and you see these tight areas on the right side, that the stock catapults out of there. People think, well, that's because of the chart. Everybody sees it. No, absolutely not. It's just the opposite. It's not the cause, it's the effect. If everybody saw it, it wouldn't work. That's precisely would be the opposite. So you have to think, how is the supply coming to market? This took me a good decade to even understand, let alone to apply. And even to this day, Bob Weissman, who's worked for me for 21 years, it took him a decade. 10 years later, he goes, all right, I think I got it. It's like 10 years later, he goes, I think I got what you're talking about. He's asked me every day, what does it really mean? And then he say he thought he would get the point. And then he'd tell me, and I said, no, that's not right. That's not what it means. And we had to go over it and go over it and go over it and go over charts. So once you understand that, then you really understand what's going on here, and it can make sense to you.
I
Well,
love that.
I'll just
Yeah, go
add too,
ahead.
and you look at those first two little pivots.
So tight.
They're the bet. They're
Perfect.
tight in price, yeah, and the volume is contracting, and that especially that second one, well, that volume comes in. Price only has one place to go. That demand that Mark is talking about, you're seeing it right there. It's just a textbook example.
Yeah. And again, they said, well, why aren't you the richest man in the world? You just do that. Well, because there's discipline involved. It doesn't work all the time. Matter of fact, it only works about half the time in a good market. In a bad market, this will only work about 20, 30% of the time. Right. But that's part of the strategy. Part of the strategy is managing the times where things don't work well. It's like, do you go up to bat and get a base hit every time? No. Do you hit a home run every time? No. Good baseball players bat 300. That's good, right? They strike out 7 out of 10 times. So then how do you ever win a game? You know, it's the same thing. You've got to manage it. You've got to manage it and take advantage of when it does work. With trading, you have the position sizing. You can step on the gas when it's working. You could ride the brake. And that's the art part. That's part science, but also takes a lot of experience to get it to where you really understand when you should be really gassing it and making those returns and then laying off and letting all the noise go by.